Imagine this. Foreign institutional investors have sold billions of rupees worth of Indian equities over the past few years. Normally, such heavy selling would put enormous pressure on the stock market. But surprisingly, the Indian equity market has remained remarkably resilient. What is supporting the market? The answer is not foreign investors. It is ordinary Indian investors investing every month through systematic investment plans, commonly known as SIPs. According to the Business Standard article dated the 27th of June 2026, SIP-linked assets now account for more than 40% of the total active equity mutual fund assets under management for the first time in India's history. Why is this milestone important? Does it indicate that Indian investors have become financially mature? Will SIPs continue driving the stock market? And should new investors begin investing through SIPs even after the recent market rally? In today's video, we will analyze the Business Standard article in detail, understand the latest SIP trends, decode the numbers, examine industry insights, discuss the benefits and risks, and understand what this means for long-term wealth creation. Stay till the end because I will also explain whether this is the right time to start or continue your SIP. What is the big announcement? According to the Business Standard article dated the 27th of June 2026, SIP-linked assets have crossed an important milestone. As of May 2026, SIP-linked equity assets reached approximately 14.6 trillion rupees. Total active equity mutual fund assets stood at approximately 36.1 trillion rupees. SIP-linked assets now account for 40.4% of total active equity mutual fund AUM. This is the first time that SIP-linked assets have consistently remained above the 40% mark. It reflects the growing participation of retail investors in India's equity markets. What exactly is SIP? Before understanding why this is important, let's briefly understand what SIP means. A systematic investment plan allows investors to invest a fixed amount regularly into mutual funds instead of investing a large amount at one time. For example, instead of investing 1 lakh rupees in one transaction, an investor may invest 5,000 rupees or 10,000 rupees every month. This approach offers several advantages. It promotes financial discipline. It reduces the impact of market volatility through rupee cost averaging. It encourages long-term wealth creation. Most importantly, it helps investors avoid emotional decision-making during market fluctuations. Why has SIP become so popular? Several reasons have contributed to the rapid growth of SIPs. Financial awareness. More Indians now understand the importance of long-term investing. Digital platforms, online investment platforms have made investing easier than ever. Rising middle class, increasing disposable incomes have encouraged regular investments. Long-term wealth creation. Many investors have realized that disciplined investing often performs better than trying to time the market. Investor confidence. Despite market volatility over the last few years, investors have continued their monthly SIP contributions. This consistency demonstrates growing confidence in India's long-term growth story. Key numbers you should know. The article highlights several important statistics. SIP assets increased from approximately 38.8% a year earlier to 40.4% of active equity AUM. Monthly SIP inflows remained above 30,000 crore rupees for 3 consecutive months. May 2026 SIP inflows stood at approximately 30,954 crore rupees. The industry also witnessed strong year-on-year growth in SIP assets, active accounts, and investor participation. Although monthly inflows moderated slightly from March highs, they continue to remain at historically strong levels. These numbers indicate that retail participation remains healthy despite short-term market fluctuations. Why is this important for the stock market? SIPs provide a steady flow of long-term capital into the equity market. When foreign portfolio investors sell Indian equities, domestic SIP investments often provide stability. This helps reduce market volatility. Regular monthly investments also improve liquidity and support long-term market development. This increasing domestic participation is one of the major structural changes in India's capital markets over the last decade. What industry experts are saying? According to industry representatives quoted in the Business Standard article, retail participation continues to deepen. The number of active SIP accounts continues to increase. The long-term outlook remains positive despite temporary moderation in monthly inflows. Industry participants also expect investor interest to strengthen further if market conditions remain supportive and geopolitical uncertainties continue to ease. Should you start a SIP today? Many new investors ask one common question: should I wait for a market correction before starting my SIP? Historically, SIPs have been designed to address exactly this concern. Because investments are made regularly over long periods, investors automatically purchase more units when markets fall and fewer units when markets rise. This reduces the risk of investing a large amount at the wrong time. However, every investment decision should consider your financial goals, investment horizon, and risk tolerance. Risks every SIP investor should understand. Although SIPs are an excellent long-term investment tool, they are not risk-free. Investors should remember, mutual fund investments are subject to market risks. Short-term returns can be volatile. Past performance does not guarantee future returns. SIPs work best over longer investment horizons, generally 5 years or more. Discontinuing SIPs during market corrections may reduce the benefits of long-term compounding. The Business Standard article dated the 27th of June 2026 highlights a significant milestone in India's investment journey. With SIP-linked assets now accounting for more than 40% of active equity mutual fund assets, Indian retail investors are playing an increasingly important role in supporting the capital markets. The steady growth in SIP participation reflects improving financial awareness, disciplined investing, and confidence in India's long-term economic prospects. For long-term investors, the key lesson is simple. Successful investing is not about predicting market movements. It is about investing consistently, remaining disciplined, and allowing the power of compounding to work over time. If you found this detailed analysis useful, subscribe to Suffer or Seek Knowledge for company news analysis, mutual fund insights, stock market education, IPO reviews, business developments, and practical investment knowledge. Disclaimer: this analysis is based on the Business Standard article dated the 27th of June 2026 and other publicly available information. It is intended solely for educational and informational purposes and should not be considered investment, financial, legal, or tax advice. Mutual fund investments are subject to market risks. Please read all scheme-related documents carefully and consult a qualified financial advisor before making investment decisions. Disclaimer: the content published on Suffer or Seek Knowledge is intended solely for educational, informational, and knowledge-sharing purposes. The views, opinions, analysis, and discussions presented on this channel are based on publicly available information, official disclosures, applicable laws, regulations, financial statements, annual reports, stock exchange filings, and other reliable sources believed to be accurate at the time of publication. The information shared on this channel does not constitute legal, financial, investment, tax, accounting, or professional advice, nor should it be treated as a recommendation to buy, sell, or hold any security, financial instrument, or investment product. Company analysis, business news, stock market discussions, IPO reviews, regulatory updates, and corporate governance topics represent the creator's educational interpretation of publicly available information. Viewers should independently verify facts and consult qualified legal, financial, tax, or investment professionals before making any business, legal, or investment decisions. Investments in securities and financial markets are subject to market risks. Past performance does not guarantee future results. The creator and Suffer or Seek Knowledge shall not be responsible for any direct or indirect loss or damage arising from reliance on the information presented on this channel. This channel is independent and is not affiliated with, endorsed by, or representing any company, stock exchange, regulatory authority, government body, listed entity, financial institution, or professional organization, including but not limited to SEBI, MCA, RBI, BSE, NSE, or any other regulator. All trademarks, company names, logos, and brand names mentioned or displayed belong to their respective owners and are used only for identification, commentary, reporting, criticism, review, or educational purposes where applicable. By viewing this channel, you acknowledge and agree that the content is intended for educational purposes only and that you are solely responsible for your own decisions and actions.